Hey everyone, welcome back to yet another episode of our weekly Forex forecast. In today's video, we'll delve into the incoming market trends, potential trading opportunities, major currency pairs, and key economic events that might influence the Forex market next week. But before we do that, if you're new to this channel and you'd like to make money, make sure to smash the subscribe button, hit the like icon, and then leave a comment on what you think. So to kick things off, we will be recapping on our previous analysis on our previous weekly outlook. All right, so first things first here, I highlighted the S&P 500. I said that the S&P 500 was gonna collapse, all right, because I noticed a change of trend, or rather a break of trend line here. All right, so there was a medium term change of trend, and this was technically, it turns out that this was technically a pullback to this key level. And now the reason as to why we are kind of pull back to this level now was because we had on the higher time frame, we had inverse head and shoulders pattern right here. So this was the inverse head and shoulders pattern, and technically, once the market breaks the neckline of a chart pattern, it should, come upside. All right. So that is exactly what has happened on SPX, and it is just a trend continuation in this case on the higher time frame and also on the lower time frame. So for me, the level that I was actually highlighting, and then that I was actually paying attention to when it comes to the SPX was 4,589.58 basis points, was 4,589.58 basis point, and that right there is exactly where the market is headed. And if we make it through this level, the overall level target for the XPX will be 4,800 basis points for it. All right, so that's that about the SPX. Is there any trading opportunities with this? Let me see if there is any. So because now it appears the actual move has already started. All right, the move has already gone far, and is there a way we can make money off of this? Okay, so let's see something real quick here. All right, so now this is an impulsive move. All right, this right here is an impulsive move. So we see that recently we had this particular structure here where the market actually reacted to at this point here. All right, so because if you look left easily, if you look left, you can tell where the market has had issues breaking to the upside or to the downside. And in this business, or in this part of the world, history tends to always repeat itself. So now that I've actually blown through this level without coming back to retest it. Ideally, I would be waiting to see, if you can have maybe like a pullback, all right, because this is an impulsive move already, so we should have a pullback, and then we should ride this guy all the way to the upside, all right. So that is about SPX. For me personally, I'll be waiting to see something like this, like a drop here, a pullback to this level here of 4,402 basis points, and then we can rally all the way back up to 4,008. I highlighted this pair in a previous weekly forecast, and then I said to you guys that I was actually super bullish on this pair coming into this level, and in fact, that is exactly what we have done simply 2 weeks after. All right, so we have rallied into this level 2 weeks after. So quick one, you guys, I like to do a top down analysis where I go from the higher time frame, and then I work my way all the way down to the lower time frame where I make my entries. So I told you guys that this particular level here, this particular pullback here, was just to comprehend this impulsive move that we had already here. Because I said it earlier. I said listen, if the market has had an impulsive move of about 100 pips, we should have at least a 30 to 50 pips, pullback to be able to compensate for the entire stretch. And that is exactly what is happening here. Well, I'm actually not confident selling this guy in here, because one thing you will never catch me do is try to sell a market on a support level or a resistance level. I always wait for the bounce. Okay. Once again, if you want to know more about this, check the link in the description. It will bring you straight to my Telegram community. So for me, what do I think about the euro dollar moving forward as we have hit our targets here? All right. So now, guys, two things. Okay. So two things, because now this is also a Fibonacci level. All right, Fibonacci level. You guys know me. I love my fibs so much. I love my Fibonacci level. So two things, guys. So it's either we actually break and sustain above here, since this is already being a bullish engulfing candle. It's either we break and sustain above this bar here, and then we start pointing to the upside, or we actually respect this price action happening here and then rotate all the way back down. All right, as usual, trading is reactive, it's not predictive. So I'll be sitting on my hands and then I'll be waiting. But for now, it's a bit of a 50-50 because this is the bone of contention right here. So scaling down to the lower time frame, how do we take advantage if at all there is anything to take advantage of here? So I spoke about if we do get a break and close above, then I'll be targeting the previous highs, which was this, and then obviously we could see trading opportunities to the upside. But for me personally, I am actually on the bearish side of things because the overall flow of the river is actually heading south. It is actually very, very bearish. If you go from the monthly time frame, scale down to the lower time frame, you actually know that this pair is quite bearish. It's been bearish for a while now. All right, so for me, long term wise, I'll be waiting. So if I do not see a convincing break and close above this level here, all right, I'll be waiting for to see some bit of price action happening right here now. So now that we have actually hit this previous supply level or resistance level here, I'll be waiting for my criteria. So you guys know the rules of engagement is this: we must see a candle break and close out of our counter trend line before we now start selling all the way back to this point. All right. So if the market wants to drop, it has to tell me. And how does it tell me? It must break my counter trend line. So this is a helmet for me. All right. So this is the criteria. On one condition, I would actually wait if we do break this trend line, then 4 hour candle break and close, guys. 4 hour candle break and close on of this trend line, then I actually have a trade on this pair. Otherwise, I have no business selling this guy right now because this is sitting on a key level. We could blow out to the upside and then we could rotate to the downside. As usual, like I keep saying, trading is reactive, it is not predictive. So I'll be sitting on my hands and waiting for us to clear this trend line here. And then once we do clear this trend line here, then our next level target for the euro will be 1.005166 at this level right here. All right, so that's about the euro. So the next pair on my list would be the Great British Pound versus the US dollar. That is GBP USD. So, all right, I don't like what I'm seeing on AUD USD. It's looking like a trap, and I said it. You guys didn't believe me. However, it has played out. All right, I knew this was going to be a trap right here, and then also I noticed something, on this pair. We could actually come in for a trend line right here, and sort of trend line always seems to do trick. All right, so the market could potentially rally into this point here, then collapse all the way to the downside. It doesn't change my stand. I am still very, very bearish on AUD moving forward. Actually, I'll be waiting and then looking for potential trading opportunities because this is also looking like a profitable trading setup that is actually cooking right here. So this is going to be this is not just going to be the touch of the trend line, but this is also coming into a Fibonacci level. This is coming into a key support level that is now acting like a resistance or supply level. All right, so this is a solid trade to watch out for. Once again, I'll be patiently waiting for this guy to finish. Once again, I'll be patient. Once again, I'll be patiently waiting for this guy to finish whatever business he has to do up here, and then let it tell me that it is ready to sell, and then I'll come on here. You guys know the rules of engagement. 4 hour candle break and close, but I like to see some wave patterns from. So after you guys know me, I like to see some bit of fake out market manipulation. Then after that, the market to drop in my direction. All right. So you guys know rules of engagement. 4 hour candle close up here, and then we should rotate all the way back down to this level. I kid you not, I am still very, very confident that the Aussie dollar is gonna drop all the way down to our overall level target, which is 0.600000. All right. So that is about the Aussie dollar. The next pair on my list is going to be NCDCHF. So I can remember coming on here on the previous weekly outlook to speak about this NZD and I was like, okay, look, I'm actually going short on this guy. However, I got stopped out on break even. Yeah, you guys, once again, I'm being honest. There's absolutely nothing wrong with being stopped out on break even or taking a loss here and there. That's just how the market works. All right. However, I didn't actually take a loss. I just got stopped out on break even. So I entered this trade right here and I was just, selling this guy. And then obviously the news events came in. I think it was the CPI came in and then gave us this candle and then popped my he poked at my stop loss because I had some early entries here. So he put on my stop loss and then I got stopped out for break even. But notwithstanding, guys, I am still very, very bearish on this NCD CHF because now if you take a look at NZD USD, that is also inversely correlated. If you take a look at the NZD USD, that is also inversely correlated to the dollar. And once the dollar begins its upward trend again, we should see the New Zealand pairs collapse to the downside. All right. So for me personally, I'm still very bearish on this guy. As you can see, I have my protective helmet here. I still have my rule my criteria for entry still intact. We must see a 4 hour break and close here before we now hop on this trade and then ride it all the way to the downside. Buying this market, I have no business buying this market right now. Even though we have hit this key level twice, I have no business buying this guy right now. The only point in time that I would actually want to buy this market is if we actually break above this blue bar, then there will be a potential or a bigger trend or a big trend reversal. Otherwise, I'm still confident that we should come and drop here for at least one more leg and then before we rally to the upside. All right, so that is about NZD and the last pair on my list here would be the gold. All right, so gold has totally smashed at take profit points, and you guys. Once again, if you doubt me, you can take my previous video. I gave out this trade call here because one of you recommended or so the last pair on my list is gold. That is the XAU USD. So once again, gold has totally smashed our TP point here, our first TP point. That's our first take profit here, our first target has been smashed by gold. So we made a whooping 741 pips buying gold. All right. So now the reason as to why I came on here to give you guys this gold analysis is because one of you recommended or actually asked that I break down gold for him, and I did, and then we made a lot of money in this channel and then in my Telegram community. So what do I think about gold moving forward? So now, obviously, I've taken out 50% of my money from this trade right here because this is the 100% retracement point. All right, so I have taken 50% of my total profit, and then I have some floating. My overall level target for gold is actually 2,067 ounce dollar per ounce. All right, sorry. So my overall level target for gold is 2,600 and sorry. So my overall level target for gold is 2006. All right. So once we bridge this level here, it's the exact same thing, guys. Just follow the structure. This is a high, this is a low, and we have come to put an equal high here. So you don't want to start buying or selling at this point. So what you should do is actually wait for us to breach this level. Let us break above this level and return. Then we are actually looking at 2,067 ounce, or rather $2,067 per ounce for gold. All right. So how do you take advantage of this opportunity? 4 hour candle break and close again above this level here. All right. So you'll be working with it. As you can see here, the structure is a bit clear on the 4 hour time frame. All right. So what you need to do is just count the waves. You have the low, you have the high, higher, low, higher, high, higher, low, higher, high. So we should come and put the higher low here. This my green resistance bar here. So once we do so, and then we pull back, we should actually be looking at smashing $2,067 per ounce for gold. All right, but once again, I'll come back here to let you guys know exactly when gold is ready. So for gold, I will leave it for maybe a week. All right, because actually, I think I'm going to leave gold for a few days. All right, I think I'm going to leave gold for a few days because gold is actually very volatile, so it shouldn't take that long. Okay, so I'm just going to leave this for a few days, but I'll be back here on. That wraps up our Forex weekly forecast for this week. Remember, trading is reactive and not predictive. See you in the next episode, and bye for now.